Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla. Let's go over the market, an absolutely near historic, arguably, day for the stock markets. And yeah, let's just talk about what happened today and well, what we can expect moving into the rest of the week and potentially the rest of August. So as per usual, if you enjoyed, don't forget to hit that like button. This is not financial advice. I am not a financial advisor. And of course, my membership section is live. That link is down below. If you're interested, $3 a month, you get access to all my intraday thoughts, posts, updates, etc. Technical analysis, options flow every single day. The market is open on Tesla and sometimes other stocks as well. So that link is down below if you're interested. But all that being said and done, let's just jump into a Tesla closing the day. Honestly, it's only, and I say the word only here, 4.23% closing at $198.88, which obviously compared to the market arguably is a little bit of an outperformance, with QQQ being down a whopping, and SPY really down 3%. So Tesla only being down about 4.2%, almost like a meme at this point. Honestly, not that bad, straight up, not that bad, especially considering we were down at some point like about 12% or something like that on the day, all the way down to $182 per share, which, I mean, not just Tesla, of course, the market in general, right? We had a massive crash in the market today. We had the VIX spiking to pretty much levels we haven't seen in quite some time. If I go over to the monthly chart, you can see here on the VIX, we've only seen these levels a few other times back in the 2020. I think this was the COVID crash, and I believe this was the GCF crash, right? So we're pretty much approaching, or we were rather in pretty historical levels for the VIX in terms of this spike, right? We had a lot of stuff happen yesterday, right? We had, in Japan, right? We had more like potential war escalation, and yeah, the market, let's say, was not happy today. Let's just say that. But a lot of stocks, a lot of things did bounce back pretty aggressively today. I do want to take a look at something really counter, up 16% post-market. Yeah, Lutz is reporting up 7%. Yeah, a lot of stocks did did bounce pretty well today, right? So let's talk about that. And let's talk about where Tesla is right now. And, what can we expect, right? So we're in a bit of a situation here. I'm not gonna lie. We're in a bit of a situation here for Tesla. So the way I look at it is this. So we're technically still within this massive bull flag, right? And this massive bull flag is still technically in play. My issue is this, right? My issue is if you measure, you would want to measure this from here. This bull flag, in my opinion, is in play from this move up. This was the impulse move right here, right? We started from here and we had a massive rally up. Now we technically actually did hold that 0.786 level, because we gapped down so aggressively, and we did bounce up pretty aggressively back up. But so this bull flag, I guess, is still technically in play. Honestly, it technically still is in play. But there's a few more things to be a little bit more cautious of, right? And there's a few bearish caveats here. So let's talk about those bearish caveats first, and then we'll talk about some potential bullish caveats as well. So there's a few things. First and foremost, we obviously went down to 182, massive rally, right? I ended up actually buying here pretty much at, I wrote it down somewhere, I don't know where it was. I bought AMD, NVIDIA, and Tesla today. I don't know where, here we go. I bought Tesla at 183, I wrote it down here. Tesla 183, NVIDIA at pretty much 92, and NVIDIA at 92, AMD at 123.5 is pretty much where I bought them. There were nibbles, honestly, they were just nibbles. I didn't want to go too aggressively because I had some cash secured puts, but as we rallied up pretty aggressively, those nibbles ended up actually offsetting, or at least, mostly offsetting, especially considering the rally, a lot of the, things that I had that were down from, Friday and Thursday and whatnot, right? So I ended up de-risking substantially off of this rally pretty much at 202, which is really, really good for me right now. And I'm going to reassess. And the reason I did that is pretty simple, right? The market right now is pretty frothy, right? The market right now is very, it almost feels like it doesn't know what it wants to do, where it wants to go, what's next, what's not next, right? So I'm giving the market a bit more room to breathe. I'm entering more conservative bullish plays instead of what I was in before. And the thing I'm looking at here for Tesla is the fact that, we are in a bit of a pickle. Why do I say that? Well, there's a few things, right? So first and foremost, we have this green line over here. That is, of course, going to be that 200-day moving average. And where did this rally all the way from 182, which, by the way, let's say you bought the dip at 182. Let's say you pretty much timed the bottom, and let's say you sold at market closed. That's almost 10% just off that. That's pretty phenomenal, right? So that was a pretty nice dip buy for me, which I did sell for profit, of course, which essentially offset some of my other losses that I had, which ended up working out pretty well, actually. Now, moving forward, we rallied pretty much almost to perfection right into this 200-day moving average. You can see we almost like to perfection top ticked it, right? And we, of course, rejected since then. So that's number one. That's bearish case number one. We're below the 200-day moving average. And so far, like I said, I usually want to see a trend. One day doesn't make a trend. If we start seeing several days, let's say tomorrow, Wednesday, and even like Thursday, and we start seeing us consistently get rejected by the 200-day moving average, we're consistently day after day struggling to get back above that 200-day moving average, which of course at the moment is sitting around 203.5 roughly, right? 203, 204. Well, that's where things get a little bit more concerning, in my opinion, because that's going to really cement it as a, okay, now it's really acting as a resistance, as opposed to one day where, maybe it is, maybe it isn't, maybe we can still gap above it, maybe we can't. Who knows? There's still too much unknowns for now. But again, if you consistently keep seeing that rejection throughout this week, let's say, well, that's bearish. That's not good, right? That's going to potentially lead us to moving back down into the 180s, at least in my opinion. The second thing that's bearish is, well, the level that I wanted to hold, that one I talked about on Friday, right before this pretty much like historical gap down that we just had in the market, pretty crazy market gap down that we had today, to be completely honest. It was, again, literally historic, right? If you include the VIX, right, the QQQ was down about 5.5%. That's a pretty sizable gap down. The level I did want to hold, the level I really, really wanted to hold, and I mentioned many times before, I really want to hold, is pretty much this kind of 205 to about 200-ish or 199, 200-ish range, right? I really want to hold that because, again, before it acted as a support here, acted as a resistance here, then we finally obviously short squeezed back up over it. But it's a pretty crucial area, and also psychologically as well. And what did we do instead? Well, we did not gap or go back above it. We pretty much came into that area. I told my members throughout the whole day that that's the most important area to look out for, the 200-day moving average, etc. And I'll talk about another thing soon. And I want to see it close back above at least 205. To be even more confident though, I really want to see this gap fill over here at about almost 208 closed and hold above. I want to see that. That's what would really give me some more confidence. But right now, we're not seeing that. We're not seeing that at all. And in fact, we're actually seeing quite the opposite. We're seeing a rejection in this pretty crucial, in my opinion, area, right? So this is why I'm a little bit cautious here, right? I'm a little bit cautious, and I really, really want to see this, again, this about 205 range to get recaptured. That's, in my opinion, at least, that's pretty darn important to recapture that. And then from there, we can, start making, conversations about moving higher, moving back up to 240, 250, 260, 300, right? Then we can start having that conversation. In my opinion, below 205-ish, it's hard to have that conversation with any form of confidence. Just my opinion, of course. I could be wrong, but that's just the way I look at it. The next thing that I'm a little bit concerned about is this green line right here. I know there's a few green lines, but this one right here, that's starting at 140, right? When we bottomed at 140, we had the earnings gap up, etc. Take this trend line, right here, this one here, draw it pretty much attached to these lines right here. And you can see we pretty much rejected almost to perfection. We came up right into this trend line and we rejected. We broke down below this trend line. We started ever since this massive gap up, came back down, came back up. We were pretty much coming back down to test it. Unfortunately, we had essentially a black swan or Black Monday event here, and we gapped down below it, came back up, and now we're turning it into seemingly resistance. Again, one candle does not make a trend. But again, if we consistently keep seeing issues getting back above pretty much the same range of, again, this 200, 205-ish range, that's going to further cement that, yeah, this might be a problem. We might head lower, unfortunately, right? So keep that in mind. That's important to understand. That's just the way I look at it. Again, I'm just a messenger. Don't shoot me. I'm just a messenger, right? I just kind of say things the way I see things, right? It is what it is. I'm going to put this back actually, right? And unfortunately, there's a few other things, right? What else is bearish? Well, unfortunately, the fact that we did now, unless some magical thing happens this week, we did have a false breakout on this weekly final Bosch trend line, right? This multi-year trend line, right? It doesn't even matter how you want to draw it at this point. You can't even argue now. You can draw like this, you can draw like this, you can draw like, it doesn't matter, right? We had a false breakdown, right? Or breakouts rather. Came back up, held above it for a bit, and then we collapsed back into it. That's pretty bearish. Usually when you have false breakouts like this to the downside, from the downside back up or from the upside back down, the inverse is usually the more likely option. In this case, because we had a false breakout to the upside and we came back crashing underneath, that's concerning, right? That is definitely a little bit concerning. And to me, what this means is the fact that, well, moving up much higher from here, again, 250, 300, whatever, it's going to take longer than I thought. It's going to take longer than I initially had anticipated, assuming we held the levels I mentioned that I wanted to hold many, many times, right? So that's kind of the way I'm looking at it right now, right? That's just my personal thought process. Again, I want to make it very clear. I could be very, very wrong. I could be completely incorrect, but this is why I love the stochastic, right? What did the stochastic show us during these weeks that were falling that I didn't listen to because I honestly didn't want to believe it. But what did it show? A bearish cross on the weekly chart. And what has been happening so far on Tesla? We've been pretty much crashing. Ever since it crossed bearish, we have been pretty much crashing. It crossed bearish back when we were still in the 240s roughly. Well, now we're at 190, 198. It's a pretty powerful indicator in my opinion, right? It's a pretty powerful indicator. The BX trender on the weekly is of course showing lower highs. Obviously there's more time to the week, but the signs were there. Just, I wish I listened to them a bit more aggressively myself, but I just didn't want to believe that that's the case because I thought maybe we can hold here. Maybe we can hold the retest. Unfortunately, we're not. Now, Honestly, unfortunately what this means is the fact that at some point within the next couple months, this means that, there is a very real possibility, once again, coming back down to this green line at least, right? That makes it a very real possibility, all the way back down to potentially as low as at least 170s, if not maybe even as low as 150s at the bottom of this green line that we already bounced off several times, that we have cemented as a pretty powerful support. Unfortunately, this does once again bring up this conversation once again. It makes this a very real case, really, right? It is what it is, right? It is what it is, right? And especially with this false breakout. I don't want to sound like super bearish or anything like that, but I'm saying what I see, right? I'm just saying what I simply see. Again, I do want to make it clear, if we do break above 205, this kind of two-way gap and we start holding back above that, okay, now we can start having conversations about further upside. But up until that happens, again, in my opinion, caution is warranted. Now, let's talk about some bullish signs, right? It's not all bad news, right? There are some signs of, maybe this will be okay. And the main one I want to look at is going to be this one. I want to take out Fibonacci. Remember, we did this before, right? I want to go from here to the swing high, right? The overall swing low to this overall swing high. And we talked about this kind of 618 level, right? We talked about this kind of, mid to high 180s, 618 Fibonacci retracement level. Well, we came right back into it, right? We came right back into it. We ended up bouncing off of that general vicinity, which is obviously a good sign, and we're holding it back above it. So that's still a pretty decent sign. So that is a bullish situation, right? The fact that we held that general vicinity, bounced pretty aggressively, and are so far holding it back above that 618 retracement level. So that's a good sign. Obviously, we're going to need a little bit more work, and I think there's more bearish than bullish signs that are outweighing, right? The bearish thesis feels stronger now than the bullish thesis. And I also said before how if we do even come back down to the 618 level, even though that's still bullish to hold, and I said this I think on Thursday and or Friday, it would mean that the move back up will take longer than I initially want to see, right? Assuming if we only held the 0.5 Fibonacci, which is around that 205 level. Unfortunately, we did fall back below. That's not ideal. This move back up, in theory, at least in my opinion, may take longer to, get back up going, and the momentum to really kind of get that momentum back up is going to take longer, in my opinion, as I see it right now, until we break 205. I do think once we break 205, we can start changing the conversation back to being more bullish, but until then, unfortunately, it does feel like a bit of a bearish conversation for now, right? Looking at the daily, the MACD is still bearish. RSI still looking pretty not great. The BX trender still not looking great. The stochastic still not looking great, right? I mean, it's oversold, but it's still not crossing bullish, so there's still more work to be done. Again, there's just a caution is warranted here, in my opinion, at least for a few days, until the stock decides to finally find its footing, and then we can get a better idea. Maybe we do break it 205 tomorrow or Wednesday. That is a possibility. Or the other possibility is we keep coming and trying, and we just keep getting rejected, which in that case will be probably more confirmation that we're probably going lower, right? So anyways, that's kind of the way I'm looking at it right now. Again, hope everyone's safe. I did de-risk today pretty heavily, right? Thankfully, at that morning dip that I did buy, ended up offsetting the losses. I did take some losses. It did end up eating into my July profits, though my July still went pretty well, even with that being said, but obviously not as well as it could have been because of, today, really. Anyway. That's just kind of what I got to say for now. So let me know what you think down below. Ladies and gentlemen, after market, we did have a bit of, some interesting moves on Tesla here. We had a pretty nice little rally up here. Then we lost it all. Now we're kind of chilling around this 199-ish area. So we'll see how tomorrow opens up. You definitely want to give this a bit of room to breathe, right? You don't want to rush into this too fast. And I will be personally just slowly selling cash secured puts. It's a bit of a safer way to play this until either, I get filled at much lower prices than this, which I'm happy to start reaccumulating shares, or we break 205, in which case I will be once again, looking to turn bullish once again. So that's just the way I'm looking at it. Just my opinion. Could be completely wrong. Elon could tweet something tomorrow and we could be up 10% for all I know. Always a possibility, but it is what it is. And the only reason my account actually really didn't suffer too much damage today, honestly, all things considered, especially risk management. Risk management was the important thing, at least for me. Anyway, that's all I got to say. Ladies and gentlemen, thanks so much for watching. I'll see you tomorrow. Peace.